following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the December 6th. Wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. Of course, if you can't dial in, let your fingers do the walking. Go ahead and send me an email, steve@tfnn.com. Inside that subject heading, please put radio show question, of course, inside the Tiger's Den. Well, any ping will do. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading off 4 points, S&P down 1. We got a flat market. Index 100 up 8 points. Russell's back 7. That's the biggest percentage loser to the downside, off about 0.5%. Semis are down 2. New York Stock Exchange off 30 points or 0.25%. NASDAQ Composite flat off 3 points. Trannies are up 12. Gold is up $1.60. Silver is back 10 cents. Lightspeed crude off $1.32. Leading the charts, the upside, again, today, dollar-wise, of course, that's what shows up, only $51 today. Bitcoin Investment Trust, we're actually going to take a look at that chart here, maybe the second segment, first or second segment. We'll take a look at, well, I don't know if we'll take a look at it or not, but Mad Regal Pharmaceuticals, that's up $35 or 76%. They're curing something. Environment, that's up $13 or 30%. Google's up $11. Davita, it's up $7 or 12%. So we do have some movers and shakers to the downside. OSI Systems down $17 or 20%. AutoZone, not in the zone today, down $15, 2%. Charter Communication off 9. Priceline is down 7. Of course, I want to look at what you want to look at, and I don't know what you want to look at. Actually, let's go to the first email. The first email that came in, let's go take a look at the GDX. And the question here, this was from Kevin, and Kevin was asking long-term. So if we take a look at GDX, and the question is long-term, does this thing look bullish? So by long-term, we're really going to go ahead and focus in on the monthly chart that is out here, the monthly chart pattern, so to speak. And what Kevin was saying is that apparently I said moons ago that on a long-term basis, the GDX looked pretty good. Now, because I don't recall saying that, let's go back and see if I would say the same thing today. And if we take a look at the month of February 2016, you had some volume and a wide-ranging bar off of the bottom. So that looks pretty good to me. And then 2 months later, in the trading month of April 2016, you had some additional follow-through. So yeah, looks like we're in pretty good shape inside the GDX long-term. Of course, if we take a look at the TAS market profiles on a monthly basis that are out here, that doesn't mean that the GDX can't get down to 1628. It's trading at 2168 as we speak right now. What we do know with regard to the GDX, with regard to market profiles, is that 2985 is the current level that must be cleared. Not so much the swing point that's out here from the month of August 2016 at 3179, but we know that this is a bearish structured market profile on a long-term basis. What that says is that sellers should have control of this price area between 29.85 at the top and 16.28 at the bottom. Am I calling 16.28 as the price target? No, that's not, because I'd really be looking at daily patterns out here. But, long term at this stage, Kevin, we have some higher lows, and you like to see that. That's looking at the monthly chart. If we go look at the weekly chart out here, well, it's a bit more blue. When I say blue, it's because right now this week should, in fact, the GDX close below 22.33. Not a good signal out here, because that is the bottom of its weekly market profile. What does that mean? That means, well, we could see there's been a consolidation out here. If we just take our yellow, I think it'll come out in yellow. If we just take our yellow rectangle indicator out here, as long as a GDX continues to trade within this rectangle, this consolidation move, the key to probably trading anything is to understand what type of market are you in. Are you going from lower left to upper right? Are you going from upper left to lower right? Are you just simply going sideways? Because the markets that are the most difficult to trade are the ones that go sideways. So in the case of the GDX, it's just in this consolidation that in essence it's been in since January of 2017. So the entire year out here, price is coming down towards the bottom of that consolidation. Last time price was down here, 217 million shares. We're only at Wednesday, 86 million shares. Seems a bit light out here. 307 million shares back the week of May 1st. So probably the buy area, Kevin, if you wanted to, would be down around that bottom of that consolidation area in the 21-ish range out here. If I go take a look at the daily's not providing us with a whole ton of information, at least with regard to support, other than this, what looks like key reversal bullish engulfing session from July 10th, 2017. There were 52 million shares on a daily basis. Today you're doing 17.6. The top of that bar was 21.65. So far we've traded down to 21.61. So you're pushing into a swing point with light volume, or what looks like light volume. I really won't know until the day is over. Typically, if this were to close below 21.65, that is the high of July 10th, you would anticipate, even on light volume, that price would go down and explore the bottom of that swing, 20.99. 20.99. That's really where you want to see a test and rejection of that swing point. On the other hand, if today by 4 o'clock you see a rejection of that swing point, meaning the close of above 21.65 and you're at 21.67, that would also be a test and rejection of the GDX. So Kevin, I hope that helps you out. And yes, long term, it looks PDG. That's pretty darn good. So thanks for remembering. No other questions that I can see out here. So let me share with you what the markets are doing, or what I believe that they are doing. And let's do that when we get back from this break. That was just strategically placed out there. But there could be a change in trend signal come the end of the day. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 4. S&P is up 12 cents out there. And as I said before we went to that break, at the end of today's trading, we may see a change in trend signal. And that change in trend signal here coming from the NASDAQ 100. That's right, the NDX 100. As we take a look at this chart here, you and I have looked at this for a while, when it's appropriate, when it's necessary. And what you can see when you take a look at the very right-hand panel on this chart here, or you can look at the left-hand side where it shows you current breadth statistics. What you will notice is that there are 31 stocks in the NASDAQ 109 or something like that, 108, 109 holdings. There are 31 stocks where price is trading above the top of the market profile. When you trade above the top of the profile, it's the same as a breakout, or the way that you would interpret it is it's a bullish move. Whereas when price is trading below the bottom of a market profile, and there are 40 that are trading below, so you have 31 above, 41 below as of 1:19 in the afternoon. I don't know what the statistics will be come 4 p.m. But let's assume right now that this is 4 p.m. This is the end of the day, and this is the way that it finishes. What you have is what we'd call a bearish cross. What you and I do not know is how long would this bearish cross last. Could be a day, could be a one-hit wonder, could be 2 weeks, could be 2 months, could be a long period of time out here. But if it closes like this, the bearish cross market breadth is signaling that you've got some real troubles ahead. And in fact, it could be used as a short signal. Let me show you how and why you could take a look at trading with just simply the market breadth data. Now, this is not going to be a system of being able to try to identify the top tick or identify the bottom tick. But it is good, and this is not for long-term traders. For that, we'd go to the weekly profiles. Those are still bullish. But if we take a look at the daily here, and what I've done for you, I decorated in both green and red arrows out here to match our green and red body candles. The red arrows are days where you have a bullish or bearish crossover, and the green arrows where you have a bullish crossover. So I've taken it back here just simply into the June time frame, and June 27th, you received a bearish crossover. The market moved down until you got the bullish crossover that came on July 11th. So if you traded it to the bearish side out here versus the bullish, and just simply you went ahead and you closed out your position and you reversed directions out here, you would have lost just a few buckaroonies on July 11th. July 11th, it gave you the bullish crossover, and then you saw a gap up on the very next trading session, and there you would have made some nice shekels when you got that bearish signal on August 2nd. You would have made some additional bearish side money after you got the bullish signal on August 29th. Would have been a scotch, but nonetheless still a scotch. You certainly wouldn't be like, losing tons of money. And I'm not suggesting you use this as your trading system out here, but it is a PDGO, a pretty darn good one. And so that bullish signal on August 29th would have given you that one day, you didn't know it at the time, on September 26th out here, a bearish signal, which was erased on the very next day, which has caught this nice run-up since September 27th. Today, potentially giving you, at the end of the trading session, that bearish cross. So here, that bullish one would have gotten you in right around the 59 end-of-day signal, 59.57. You'd be out somewhere around the 62.70-ish type area out there. Depending on what it is you're trading, those are some pretty nice dollares out there. Now, we only see that inside the NASDAQ 100. And let's just stick with the NASDAQ 100 for the moment. And let's just go see if there are other signals out here. Well, for the NASDAQ 100, I can't really give you that signal, but we can go take a look at the NASDAQ composite. Now, I will tell you, I personally am long the NQ as we speak. But that may be a different story come the end of the day. So I'm just paying attention to it, not just for the Sam heck of it out here, but truly to assist me in my trading and what to anticipate. But if we do take a look at the NASDAQ composite, we have a little bit of conflicting signals, conflicting from the standpoint that this looks like day two of a test of a gap to the upside. That is a sign of strength. Gaps are our friends. No matter what, they are our friends because they reveal information to us, to the upside, to the downside. So we do know that support has held inside the NASDAQ composite by testing the 67.42.33 area. We'll get rid of the other gap out there. So that says, hey, support has held. But if we take a look at the advanced decline oscillator reading, you're going to see that yesterday, or I'm going to share with you that yesterday, this closed below zero, minus 30.95. Today, we're trading at minus 71 and change out here. 2 days below says that it is sellers that are in control. Doesn't tell us for how long, but tells us that sellers are in control. And would even suggest that price probably gets down to test the November 15th swing point low out there. Maybe that's our buy. I can't say where that next buy comes in. I believed that buy came in yesterday. It was tested today, and thus far is held. This is looking at intraday stuff out there. You might say, what are you talking about, Steve-O? Well, the same patterns that form have been present before every bear market top. We use them on an intraday basis. Here's the pattern. Price moves down, does with less relative energy. Get the cavalry to rush in, says price is going to go ahead and move up. You actually had a slightly higher low this morning at about 4 o'clock. A double bottom, so to speak, really just a test of a swing point. You can't call it a double bottom because you have to break the prior swing point to the upside in order for it to be a double bottom. But you kind of know what I mean. We do have the price oscillator here on a 30-minute chart above zero. Price above the red line out here, 62.68. So there still is the possibility that price could move to the upside and that market breadth that we looked at could get to bullish by 4 p.m. I don't know. All I know is I'm going to wait and see, and then make decisions then. But that price relative strength divergent pattern was present in all time frames. Here it is on the 240. I show you the 120. It's there as well. So now in the case of the 240, price has got to clear 63.18 at the end of the day to really keep me in the trade, so to speak. So we have a bit of divergence out here. But I would have to say, all in all, NASDAQ composite says sellers are in control. Market breadth on the NASDAQ 100, sellers are in control. New York Stock Exchange, this would be day 2 underneath the zero line of the advanced decline oscillator, says sellers are in control. S&P 500, another almost test and rejection of the 50-day exponential moving average at 1065. Sellers are in control. For how long, I don't know. I start to fall back on the daily chart patterns out. Well, what I would really do is when I say I don't know, I mean I know. And boy, that's real conviction. The reason why it's sort of is because I won't know till price gets back there. When I say back there inside the NQ, it's a mystery to me. I don't know where support is. I don't have a bottom of a or even a top of a TAS market profile. So instead, I've got to take a look around and say, hey, what's the Tom to Mark count? What's the A to B equals CD pattern? Even if you can make one up. And by the way, it looks like this, if I'm going to go ahead and make one up, and says 6208, 6158. So we come back from this break. We'll continue this journey unless I see a question in the Tiger's Den, unless I get an email. And hey, we're going to go look at that Bitcoin investment trust. A very interesting coincidence occurs. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Just kind of multitasking here. Sorry about that. Let me see if this actually works. Oh, it does. Okay. So back to the NQ. there's a potential of an A to B equals CD pattern to the downside. I say potential because we really haven't broken through a swing point. That swing point on the NQ right now that we're looking at would be, I'm going to use the low of December the 1st out here. But what we do know, and that gives us price target projection 6208, 6158, 6094, and so forth. So we use those now that would actually set up a Gartley buy pattern. Some of you might say, what the heck? Yeah, exactly. What the heck is that? Well, that's where you've missed a large move. For example, the move off of the October 25th low out here. And you want to get in, and H.M. Gartley in his book, came up with this A to B equals CD pattern, and it would look something along these lines here, giving us a nice price projection. And the 0.618 retracement gets us into about the 6170 level out here. And under the proper conditions, that might be the price target for the NQ. We just don't know. And we just have to take this one step at a time. But that would be the step that I would be looking at. And many of you might say, oh, Steve, geez, you've given us all this information about how bullish December is, based on historical. And you have to understand that that information there is based upon the Dow. That's average information. And it's not unusual, for example, for December to be kind of a choppy style month out here. In fact, if we take a look at this chart, slideshow, current slide. This is a chart of December since the March 2009 bottom. So it doesn't, so it includes December of 2009 forward. Now, what this is showing here are trading days. Don't pay attention. Most trading months have 20 days in them, but some have more. One or two more. And so don't pay attention to these last two bars that are out here, because you see, if the way that this is calculated, I know exactly what the first trading day of the month is, because they all start on the first trading day of December, right? When you just kind of put a spreadsheet together. But in some months at the end, you might have somewhere there was a larger set of data points, meaning 22 trading sessions, and those are not all lined up with the last days of the month. So I kind of have to figure out a way how to flip that as well, so that the end of the chart is more accurate. But this tells us about the first day in December, on average, since 2009, has been an up session. In fact, in the Dow, it's been almost 50 points to the upside, whereas the JA trading sessions day 2 and 3, we're in day 3, to the Dow would be to the downside. Tomorrow's supposed to be the upside. The next day to the upside. So Thursday and Friday supposed to look pretty good. Monday to the downside, day number 6, and so forth. So you can see quite a bit of chop in here. In fact, you get chop all the way up until basically day 11, kind of the middle of the month up here. And this is really the more bullish time for the month of December, where you've got 2, 3, 4, 5, 6, 7, 8 days in a row that typically have been up days. So that might assist you and I with also trying to identify a bottom in the marketplace. That's just simply the average movement of the Dow. So hopefully that helps you out. Now, I had mentioned an interesting chart, and we'll do that, and then I'll get back to Dano's question about Home Depot that does have an island top pattern in it. And we'll say kudos, nice spotting, Dano. Now, the question, I was asked this question yesterday or the day before. I think it might have been yesterday. Or maybe it wasn't even last week. Any thoughts on Bitcoin? And what I shared with you is, because I don't have the actual indice data, that I'll just simply wait for the futures contract. And then from the futures contract, we'll be able to identify and evolve some patterns out here. But I got a number of questions from many others with regard to should we buy Bitcoin? I mean, a bunch. I don't think I've gotten that many different people, clearly different folks that are out there. So that said, geez, I better go do a little bit of homework out here for you. Now, the interesting thing was, where I started with this was I just simply started by taking a look at the most recent low that I'm going to call as the most recent low, is September 14th. because what I was looking at there was a breakout pattern that actually took place when the market gapped up here on November 27th. It broke above a prior swing point. Did it, by the way, with wide-ranging bar. You have to fill in the gap with volume and everything. I don't have the volume turned on as we speak right now. Don't pay attention to a couple lines. What I want you to focus on, which is kind of interesting, is from that low. By the way, the low out here was 481 even Steven on September 14th to its high thus far. This is, by the way, this is the Bitcoin Investment Trust. So I don't know how well this actually tracks the actual, because this is just a 6.5 hour set of data versus the, but anyway, it's all that I've got, so we'll use what I've got. It's kind of interesting because from the low to the high being 1905.50, nearly a 400% return out there, took 57 trading days. Now, the reason why that is important is because this one I happen to remember because I was, in essence, trading it physically, which was back in 1980 with regard to gold. And that was that gold went from 365 to 875 in 57 trading sessions. Now, I didn't remember the 57 trading sessions. I had to go back and do a little bit of work. But I do remember when, in fact, price moved like that. The reason is because I think I've shared this story with you. When I was a kid, I used to do 2 paper routes. I did the morning paper route, the Detroit Free Press, and in the afternoon, after school paper route, Detroit News. That was how my parents actually got me out of school early, so I didn't have to do that wasted period where you basically did nothing. And so I was able to get out. And remember, and I can't remember, what did it cost for a week? What did it cost for a week to get that paper? It was in cents, and so I would be paid in quarters and dimes, except for those guys that were losers that didn't pay me on time, and I had to carry accounts receivable as just a kid for the newspaper. But you kind of know what I'm talking about. My dad would go through all my change, and he would take out all the silver coins. And he'd replace that with, whatever it was, dollar bills, what have you. And I didn't really think much of it back then until then he started taking me to coin shows. Those coin shows that used to be at the local malls every Saturday and so forth. And so it kind of got me interested in collecting coins, which I did, and some of those were gold coins. And then you fast forward to the early 80s when I was in college, late 70s, in college, and one of my teachers, who also lived in Detroit, I lived in Detroit, went to a small private college, and lo and behold, I was just doing that because, hey, he lived near me, and he was a cool guy. This guy was big into gold. If you think Tom O'Brien is a gold bug, you should have met this guy. And he would pay me in gold. Yeah, he would give me, gold coins just simply, and I didn't. But it was pretty cool. Anyway, so I very much remember this time period. Well, 57 days was what it took in order for gold to make that important top. Now we come back from this break. We'll go to Robert in Chicago. We'll take a look at Procter & Gamble. We'll answer Danny's question about Procter & Gamble. And then we'll come back to what does this mean out here with regard to Bitcoin Investment Trust. And I wouldn't be buying it today. That's for sure. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Hey, my dad died about 28, 29 years ago, and when he did pass on, he still had that entire collection of silver coins out there, so it was actually pretty cool. Hey, let's go to Chicago and speak with Robert. Robert, thanks for calling. Thanks for holding. How are you today?
I'm very good, Steve. Steve, it's Steve XLP, right?
What do you want to look at, Procter & Gamble, or you want to look at something else?
No, you've been on the XLP bandwagon, so I had to call in.
I have. And Procter & Gamble is one of the top holdings, if not the top holding inside there.
Yeah, it's so big,
yeah. So how can I help you? What are you doing? Are you in this trade, or?
Yeah, I'm long, and I thought it might go towards 115, and I think at one point you did an analysis of it, and I thought you thought it might even go higher than that. But so I just want to revisit that. I'd like to buy more.
So, and you're in this for the long term. Is that correct?
That's right. Yeah. Well, no. Let me say, if it got up towards 115, I'd move it out.
Okay.
I'd sell it.
Okay. Well, one of the things that we know both on a weekly and a monthly chart is that the current high is a fairly significant resistance area. And the reason that I say that, you've got a bearish reversal candle up here. I'm looking at the month of September, and that was really testing the month of December 2014. Now, there was 142 million shares back then. It was tested with 138, which was even light volume from a monthly standpoint. So, up in these highs here, in this 94-ish area, 93-ish area, it's a pretty significant resistance zone. It looks like price is headed to 92.84. And you've got resistance up there. So I don't know if it makes sense for you to add to an existing position for that small amount of gain out here. If you were going to, what I would suggest is wait for this to pull back just a tad. There is a decent possibility that we're going to see Procter & Gamble pull back. Today is going to be a Tom DeMark 9 count for it. That's assuming that it doesn't just completely fall apart. That doesn't look like it's going to. Now, at these Tom DeMark 9 counts, they can be areas where price starts to begin pulling back. And at the same time, Robert, that's going on, it's price oscillator. The difference between two moving averages, 19 and 39, is at the zero level. And what typically happens when that gets near zero, we see my red line, that oscillator on change line, and price catch up to each other. Now, what I don't know is whether the red line is just going to move higher into price or it's a combination of price moving lower. But what you really want to see, but since there's that possibility of it pulling back a bit out here, I would wait to see if that unfolds, because that's going to at least give you a better reward risk. And that right now, that level is 89.66. It's going to be somewhere north of that area, but I would wait there. And back to the weekly chart, it's 89.18. I'm sorry, the monthly chart is 89.18 for the level of where support is at. So I think, knowing that it moved up into that monthly swing point back in September with lighter volume, and you move down then with what did that move down with? Give me a second here. 179 million, where it was moving up with 138. Yeah, I'd be patient.
All right, so you don't think this is going to go through 94? I think it's 94 plus or something like that. 94 and change. I think the last 52 weeks it did that.
Yeah. So I just don't remember when we were talking about that. I suppose what happened, I mean, I can probably structure it. If I come back and take a look at the weekly time frame in March of 2017, there were 65 million shares up at that swing point, and price was passing that. I can't even reconstruct that. Apparently I was smoking dope or something, and I don't even smoke dope. But I got to apologize for you. I can't even reconstruct what it was I was. It must have been a daily chart that I was looking at. Now that's a possibility.
No, because I think it was a longer time. That's fine. I'm probably putting words in your mouth, but
no, I doubt it.
Okay, so
it was one of those times.
How could the XLP be going up without Proctor?
Well, so let's take a look at the XLP out here and see what it's doing, because it's just, I think there's only about 20 some odd holdings in there. If I take a look at the XLP,
and 13% of the holdings in Proctor makes up 13% of the XLP, yeah, I believe.
Yeah, no doubt. Look, today's going to be a Tom DeMark 9 count as well out here. So for the XLP, I'm not suggesting that people jump ship out there, but it gave you it's almost made, the XLP, Robert, has almost made that 100%, that critical 100% move of a move, right? The swing, in fact, it may already have done that on a daily basis. June 5th was the swing point, and yeah, we're just about there. So 100% move of a move, sometimes the market's going to do something different. But the XLP really has, to a certain extent, has done everything that it was supposed to do after making both a daily and weekly Gartley buy pattern, as it did back here in November 6, in the 53 area, and it's up at 56. So that's a pretty decent move, inside of the XLP.
Right.
But so I guess is that sounding somewhat logical?
No, it's perfect. I'm glad I called and got your view on both of them, but mostly on Proctor. So I'm not saying dump Proctor by any chance. Okay, right.
So I'm not saying that, but it does have this resistance area that it's got to deal with.
Okay, super.
Alrighty. Hey, thanks so much for calling. Have a nice have happy holidays if we don't speak to you before then.
Okay. Bye.
Robert in Chicago. Now, Dano maybe, wanted to take a look at Home Depot. And what Dano was picking up on was this gap to the downside today. And what this leaves here at all-time highs is, in Home Depot, is a island top reversal. One of the more bearish patterns that are out there. Now, if we take a look at yesterday's low, let me get my little data miner out here. Yesterday's low is 182.26. Today's high is 182.15. So you have a 11 cent, did my math right, you've got an 11 cent gap to the downside. Now, it's a very bearish pattern. And the question was, should I go short? And what we need to do is take a look at a couple of things, right? What is your target to the downside? Now, legitimately, the target to the downside would be the prior swing point. So you'd come back to November 2nd. That probably gives you a decent reward to risk out here. I'm not saying to take it. I'm saying we just start with that and say, okay, your target's 160.53, 165 level. However, luckily, our profiles formed a brand new one today, and that profile is bullish in structure. And what this says to me is maybe not so fast. Because, sure, price might get down to 176.11. You're at 181 right now. I don't know if that's worth the reward risk because that is a bullish structured profile. That says this may not even come close to getting down to the November 2nd level. You have to see this get down below 176 out here. This thing gapped up to the upside a few days ago with 6 million shares. Right now, you're pulling back with 4 million shares. It's not exactly like this has volume off of the top, so to speak. Now, maybe it's going to be more than that gap to the upside of 6.1. I don't know what it's going to be like in a couple of hours, but it's kind of lightish volume. So you've got good support, I would say, at 176.11. So I'm going to say, don't do it, Dano. Don't do it. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com. Educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back back. So the Bitcoin Investment Trust, folks, has a habit of doubling or more than doubling in price. If you go take a look at this ETF, August 2014, at about 21 bucks, took 73 days for this thing to get up to 72.50. Come back to the time period of January 19, 2016, took 104 days to get up to 130. That's after starting off at about the $40 price point. How about starting on August 26, 2016 at 75 bucks, gets up to 140, 152 bucks in 90 days out here. So, and if you take a look at the retracements, when it has done those types of moves out here, well, they've been 0.786, 0.618 retracements out here. No matter how you measure it, this thing, once it does that type of move, it retraces, at least to the 0.618 retracement level. So that takes us to where we're at today. If in fact, so is it just coincidence? Maybe it is. 57 sessions to more than make a 400% move in price out here, and everybody looking to get in. Well, if you're going to, whoops, grab the right tool out here. Likely, what this tool is going to do, this ETF is going to retrace back to about 1,025. Right in that range. Well, happens to be where you have a sign of strength out here in the trading session of November 27, and the high would be about 1075. So it all kind of lines up like that. Now, you might say, what's that red diagonal line out here? Well, if we go ahead and we change this to a log scale out here inside of Bitcoin. I thought I had some other scales out here. I did. Let's take a look at this red line from this high of this ETF. And again, I really need to get the actual data for the indice out here. But this just does show us back here when this logarithmic line was crossed and pierced through back in May of 2017. That did tell us that these moves higher are real because that line never got broken. But take a look, price ran right into support. My call on Bitcoin is going to make a 0.618, or the investment trust ETF is going to make a retracement. Folks, stay tuned. David White is up next. After David, you've got Tom O'Brien. 3 to 5, I'll see you on Terrific Thursday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.